Hi, welcome to Money 9. I'm Kartik Malhotra. If you're someone who's yet to invest in mutual funds, then Feroze Azeez is joining us today to help us answer the most basic, the most fundamental, and perhaps the most niggling questions about mutual fund investments. Feroze Azeez, thank you so much for being here with us today.
Thank you,
So
Kartik.
Feroz, म्यूचुअल फंड सही है? कौन सा म्यूचुअल फंड सही है? How do I understand as a first time investor which mutual fund is actually right for me?
I think, Kartik, it's very important to understand, and I think it's a very, very valid and an important question because there are thousands of mutual funds. You have to choose a few of them which form a part of your portfolio. So, first is choose the asset. You want equity or debt. That cuts the clutter. Then you have a smaller universe. How much money goes into debt? How much goes in equity? And then you see the track record and choose the ones which have been existing for 3-4 years plus and have a consistent delivery.
So, as an uninitiated investor, as somebody who's never dabbled into stock markets, how do I do my research? How do I understand the risks, the rewards, and what are the key figures that I need to look at?
The first thing, Karthik, is to bifurcate the stock market and mutual funds. Mutual funds are not about only the equity market. There's equity, debt, gold. Mutual fund is a platform where you can do investing in different kinds of things. Could be bonds, something as close to a fixed deposit or a liquid investment. So, point one, don't see mutual funds as stocks. See that as a platform of investing. And if you've never invested and you wish to invest, I think that's exactly where you should. The relevance of mutual fund becomes that much more because there's a fund manager doing it for you, and you and me, as individual investors, will not have the depth and the research and the infrastructure to do it ourselves.
And how do I find the right financial advisor? How do I find somebody who's actually going to guide me and help me understand this bifurcation between debt and equity and bonds?
See, you have several financial advisors. If you're just a beginner, I think a social media platform, a show like this, gives you a great guidance to begin. And if you can afford a financial advisor, look for one who teaches you, not just throws products at you. So, point one, advisor has to be a person who can take you up the learning curve. That's the most important thing. Choose a person who can do that. Meet a few of them and see the attribute of academic nature in a person, because foundation for an investor is very important for a beginner. If the person can provide you a foundation, then you have long-term gains. Second, make sure that he's a trustworthy person. He does with his money what he tells you to do. So these are the two important attributes which you should look for in an advisor, and it's a grinding process of meeting 8-10 people who are available for you to be a prospective client.
So, how does a fund manager or how does actually a financial advisor charge his fee? Is it a part of my profits, my gains from my investment, or is there a fixed fee?
So there are different fee models because the universe of different kinds of advisors exist. The most commonly used fee model is you in turn have a fee in the mutual fund and the mutual fund guys pay them. So you don't have to pay from your pocket. Whatever return you see in the mutual fund becomes your return after cost, pre-tax. So that is called the mutual fund distributor model, who will give you guidance on mutual funds and still not take a direct fee from you, and the mutual fund company will share a portion of the charge which is there in the fund.
So, Feroz Aziz, if I've got some money lying in my bank, what is the best way to start mutual fund investments? Should I buy a fund lump sum or should I start SIPs?
First thing, you have to correct that situation, Karthik. You should not let the money lie around so that it becomes large enough. So start a systematic investment plan so that you're not in a situation 2 years hence or 3 years hence that you have a reasonable amount of money in a fixed deposit. So monthly, you earn monthly, you save monthly, and you invest monthly. So if you are able to do this, then you will have a large gain of wealth over long periods of time. So to start an SIP today, and whatever you've currently accumulated, see an advisor, get your asset allocation right, and then venture in. It doesn't matter if it takes a month of grinding effort, but get the foundation and then take the leap of faith.
So, what are the most fundamental mistakes that people make? Right now, markets are at an all time high. If somebody were to invest money today, there's a good possibility that the returns might not accrue to be large enough. So, at what point should somebody actually get worried about their investments?
See, if you look at it, Karthik, if you look at 10-year investing, see, one thing which you decide is the time frame. Nobody can force you to exit or enter. So time frame is an investor decision completely. So any 10-year investor over the last 30 years has never lost money. So point one, the worst return for a 10-year investor in a mutual fund which began in the 90s is close to 11-12%. That's the worst return per annum for a 10-year investor. So don't time the market, be in it. Of course, at these levels, you may think that you will have lesser return, but that's 1-2 years. On a 10-year time frame, you will make average returns of 13-14% if you stay patient. So you should take the plunge, make the investment, because you will not be able to time it. The biggest gurus couldn't in the 2020. And they missed out. So please don't be repeating the mistake which all other co-investors who have begun this journey 20 years back have been doing, and be different.
Right, Feroze, at this point, thank you for these basics. Let's get into a round that we call the mutual funds rapid fire. Are you ready, Feroze?
Yes,
I'm going to throw a
Kartik.
few questions. I'm going to throw a few questions at you, and do respond with a true or a false for each of those questions. If you're ready, let's start.
Yes, I am, Kartik.
All mutual funds are risky, true or false?
False. Absolutely false.
Why do you say
And
that?
I say that because in a mutual fund, you also have a fund which is a liquid fund, for example, where you put your money for 2 days, make a fixed deposit kind of return and get out without paying a charge to get in and get out. So you have something which is as safe as liquid fund, as risky as a sectorial fund. So it's a very diverse platform. So not all of them are risky.
Okay. Mutual funds have very high exit load, true or false?
Absolutely false, because the maximum exit load in an equity scheme is 1%.
Okay. Over time, gold, real estate, fixed deposits, and mutual funds have given more or less the same returns, true or false?
Absolutely false. The values created over 20 years is 5 times different in equity than in even gold.
Okay. Mutual funds, investing in mutual funds requires in-depth knowledge of stock markets, true or false?
Absolutely false, because you have a professional doing it for you and you're paying for it.
New investors should avoid new fund offers, true or false?
Absolutely. They should avoid new fund offers because they are
That's a
marketing
true.
gimmick. Yes, so that would be true. Sorry, Karthik.
That would be true. All right, we've got one true. That's good. Out of 5 questions that I've asked you, we've got one true so far. That's nice. Okay, next question, Feroze. Once I start an SIP, I cannot pause it or I cannot stop it for a brief period of time. True or false?
False. You have the flexibility of stopping it, pausing it, or even redeeming the accumulated amount at any point in time.
Okay. Past returns is the only thing I should consider while starting a mutual fund investment. True or false?
False again, because there's past performance is like looking at the rear view mirror when you're driving. So looking ahead is critical. There are different variables which help you do that.
All right. Starting a mutual fund SIP when markets are high is a bad idea. True or false?
It's okay. That's like an oxymoron. So let me come back. So starting an SIP at
I'll
a
repeat
higher
that
market.
for you. I'll repeat
Yeah,
that for you. Starting a mutual fund SIP when markets are high is a bad idea. True or false?
true. No, it's a bad idea. True.
It's a
Okay,
bad idea.
sorry. No, it is a good idea. So you've confused me with two negations in the same statement. But yeah, it is a good idea to start an SIP at any point in time to make it simple.
Even when markets are high.
Absolutely. If you look at the value created, even if you began at the peak, it's in fact better than you starting at a trough.
All right. And my goals in life are likely to change. So I should start my mutual fund investments only when I'm sure of my goals. True or false?
No, goals change, so do investments. So it's a dynamic world. So false, absolutely false. So you should start it as soon as you have the first goal in mind, and things will progress. You can't decide the path just before you begin the journey.
Feroze Azeez, thank you so much for this beautiful money masterclass you've done with us. It's been a pleasure having you on the show, and I hope our viewers have understood the basics, the beginner's guide to mutual fund investments. Thanks for joining us, Feroze.
Thank you, Karthik.